Welcome back to the channel, everyone. Today I want to talk about how the global financial recession is here and also what you can do to protect yourself. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So first, I want to say that this global financial recession isn't going to cause a market crash in one specific asset class. It's not just going to impact stocks. It's not just going to impact bonds. It's not just going to impact housing. And it's not just going to impact crypto. The coming global financial recession will likely impact all major asset classes, including but not limited to stocks, bonds, crypto, and housing as well. We've already seen the S&P 500 down 16% for the year and the Nasdaq nearly down 30%. We've also seen bonds and the yields on those bonds going absolutely crazy over the last few months. At the same time, Bitcoin has decreased by over half, and we've seen some catastrophic failures in the crypto industry recently. And many are now starting to report that housing prices across the US are starting to fall. Obviously, housing prices in China fell many months ago, and it won't be long until housing prices in the UK and in Europe and across the rest of the world begin to fall as well. Rizzo tweeted saying the Federal Reserve warns that a soft landing is almost impossible due to the severity of inflation, which was and is not transitory. And he asks, a recession is required to tame inflation. Who do they think they're kidding? The Wall Street elite bankers orchestrated this crash like every crash before. Former Fed officials have warned that a recession may be necessary to tame inflation. The Fed voted unanimously last week to increase the interbank lending rate by half a basis point for the first time in 2 decades. It says 2 former Federal Reserve officials are warning the US central bank will struggle to tame the hottest inflation in 4 decades without sending the economy into a recession. It says the sentiment was echoed by Creditor, now an economics professor at Columbia University, who said the Fed will need to raise its key interest rate well into the restrictive territory to cool consumer demand, slow economic growth, and curb inflation. The interbank lending rate was raised by half a basis point for the first time in 2 decades last week. Inflation numbers have also just been released, and they were higher than the expected 8.1% at 8.3%. Now that does suggest a small decrease from 8.5% down to 8.3%, but it could be a small irregularity, and we may see inflation shoot up over 9% in the months to follow. The S&P 500 has already fallen by over 16%, and the Fed has only started to raise these interest rates. I think the S&P 500 is likely to fall much more before the Fed is finished raising those rates. Now, obviously, the Fed needs to raise these rates to curb inflation, but I personally think the S&P 500 and other markets like housing, crypto, and bonds will fall further in the months to come before the Fed has finished raising these rates and fighting that inflation. And it's not just me that has that same thought. The Interactive Brokers founder and chairman, Thomas Petterfy, said the S&P 500 needs to drop by at least another 9% to be fairly valued. And that's his thoughts on the S&P 500 falling solely into a fairly valued territory, not even encroaching into a crashing territory, just at a fair value. And Gold Telegraph also tweeted saying, breaking news, the Federal Reserve is warning in their latest market stability report that wild volatility in commodities pricing is raising the risk of contagion that would hit global financial institutions hard. And they wonder if JP Morgan and other large banks have finished reviewing their true exposure to different commodities around the world. It says the Federal Reserve warned of deteriorating liquidity circumstances throughout key monetary markets amid rising dangers from the battle in Ukraine, financial tightening, and excessive inflation in a semi-annual report printed on Monday. And it says in a press release accompanying the discharge of the report, Fed Governor Lael Brainard mentioned the battle has sparked large price movements and margin calls in commodities markets and highlighted a potential channel through which large financial institutions could be exposed to contagion. Now, I think contagion is the real key word here, because it's not just the commodities market that's going crazy. That commodities market craziness is impacting on the stock market, but not just on stocks, also on property, bonds, and in crypto as well. It says elevated inflation and rising rates in the United States could negatively impact domestic economic activity, such as asset prices, credit quality, and financial conditions more generally. They obviously left the definition of asset prices very vague because, as I said, it's not just going to impact the stock market. The contagion will likely spread to other markets like property, crypto and bonds. And the report also referred to US housing costs, which it mentioned could be particularly sensitive to shocks given excessive valuations. And now, to support the fact that this global recession won't just be impacting property and stocks, Coinbase has released a new disclosure in their recent 10Q filing that says in the event of bankruptcy, customers could be treated as our general unsecured creditors. Guys, if you didn't already know, you can currently get 5 free stocks worth up to $3,500 each and a free share of Twitter on top of that when you sign up to Moomoo and make your first deposit using the link in the description below. Moomoo and Futu have also officially announced that Futu does not accept payment for order flow, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. Moomoo also recently won the award for being the best trading platform at the FinTech Breakthrough Awards. Moomoo is very easy to use, it's incredibly customizable, and it will help you to trade like a pro. Moomoo has tons of technical indicators and advanced charting tools. Moomoo publishes daily short selling data, position cost distribution, and much, much more. So guys, be sure to sign up to Moomoo using the link in the description below to get up to $17,500 in free stocks and a free share of Twitter on top of that. The full wording says, moreover, because custodially held crypto assets may be considered to be the property of a bankruptcy estate, in the event of a bankruptcy, the crypto assets we hold in custody on behalf of our customers could be subject to bankruptcy proceedings, and such customers could be treated as our general unsecured creditors. Now, if you didn't already know, when a company goes bankrupt, there's a form of hierarchy or a tier list as to who gets paid out first when a company goes bankrupt. So obviously when a company goes bankrupt and the company is wound down, the first people or the first form of creditor to receive money is those with secured loans, aka mortgages or debts that are secured on physical assets or are secured by the company. aka any form of loans or financing that Coinbase has received in the past is likely to be paid off first if and when Coinbase end up bankrupt. You've then got any administrative burdens like the bankruptcy costs and the cleanup, aka the firm winding down the company ends up being paid second. You've then got priority unsecured creditors such as wages to current employees that are due and any taxes to the government or taxes to the state. And finally, after that, you've got the general unsecured creditors, aka unpaid bills or the Coinbase customers. And lastly, you have the equity, aka the shareholders of Coinbase are paid out last. Now, obviously, it's not comforting that your money currently held in Coinbase may not be protected in the event of default by insurance, and you may fall as a general unsecured creditor and never actually receive back the cash that you're currently holding in your Coinbase account. But again, this isn't just restricted to physical US dollars you're holding in your Coinbase account. It also relates to crypto assets, aka they could physically take your Bitcoin and Ethereum that they are holding on your behalf and use it in their bankruptcy proceedings. Now you may say, Tom, surely there's no chance that a major crypto company like Coinbase actually ends up going bankrupt, right? But what about those major crypto failures that you spoke about at the start of the video? Well, we can start by looking at Luna, which has had a major catastrophic failure over the last few days after being attacked potentially by Citadel. Luna at one point traded over $120 per coin and was recently trading around $84 before falling to under a singular dollar in a matter of only a few days. That is obviously a major catastrophic failure, with the coin losing nearly 100% of its value. If you wanted to know, Luna is currently down 94.82% on the day alone. Now, if we look at the current market cap of Luna, right now it only has a market cap of $642 million. A few days ago, this was $41 billion, but obviously Luna has lost the majority of its value. If we compare that to Coinbase, Coinbase only has a $16.2 billion market cap and therefore is technically much smaller than Luna was. So if a $40 billion company and a $40 billion crypto can evaporate in a matter of 4 or 5 days, then it wouldn't surprise me if Coinbase could also disappear in under a week. And again, if we look at that Luna stablecoin that was supposed to be stable and pegged to the US dollar, aka with one coin equaling one singular dollar, it's now currently trading as low as 30 cents on the dollar. This was after Luna was depegged from the dollar the other day, as I said, potentially by Citadel. On-Chain Wizard posted a thread calculating how much the attacker actually made from destroying UST and destroying Luna. He tweeted saying how to make over $800 million in crypto, attacking the once third largest stablecoin, George Soros style. He said everyone's talking about the UST attack right now, including Janet Yellen, but no one is talking about how much money the attacker actually made or how brilliant it was. And therefore, not only has Bitcoin fallen by 25%, not only have they destroyed a crypto coin in Luna, one of the 10 largest crypto coins, but they've also unraveled the third largest stablecoin in UST. That's obviously going to send a massive shock through the market and spur on additional regulation, which could cause Bitcoin, UST and Luna and the entire crypto space to fall further. But interestingly enough, even though Bitcoin fell below $30,000, the third largest stablecoin was destroyed and one of the top 10 crypto coins was destroyed as well. The Coinbase CEO, Brian Armstrong, believes there is no risk of bankruptcy. He said even amid a black swan event that saw Bitcoin drop below $30,000, he does not believe that Coinbase will end up going bankrupt. And if we look at the Coinbase stock itself, Coinbase over the last few months has fallen from a high of $368 per share down to $70 yesterday, and right now in the pre-market is currently down another 24% on top of that, trading around $54. So far, Coinbase has fallen by over 85% in the last few months, but somehow the CEO still doesn't see a risk of bankruptcy. Now, obviously, I can't really advise you on how to protect yourself in this market because I'm not offering financial advice and I'm not a financial advisor, but I don't think right now is the best time to be buying speculative growth or risky stocks or speculative growth or risky cryptos. I think now is a good time to put your money in secure locations and not be buying and holding very volatile cryptocurrencies or very volatile stocks. I think right now is the time to buy stocks with a negative beta that tend to perform in the opposite direction of the market, stocks that could potentially be susceptible to a short squeeze like AMC and GameStop. As I've spoken about in many videos on my channel, as the market crash happens and these massively over-leveraged hedge funds are forced to sell off their long positions and cover their over-leveraged shorts, it will cause the AMC squeeze. So guys, be sure to drop a comment down below and ding that notification bell because that way you'll be alerted when I upload a new video. Cheers!